Welcome to the channel, guys. This is the latest discussion going around with respect to the Hamburg research on Adani group of companies, and they have come up with this report that you can go and read it out. I mean, out of all those pointers and metrics that he has highlighted, what I picked up for today's session is current ratio. We'll just go about what exactly they are saying, and then we get into detail, understand this is one current ratio, and then one is called quick ratio, and how it's relevant for us. I'm not claiming anything here, whether the report is right or wrong. I'm just going, so we as an investor in the stock market or looking at fundamentals of a company, or maybe if you invest in a mutual fund, and you can go to the company, research what all companies have, and this is one of the key metrics. Even everybody realize. Let's go through in detail. So they say, right, the primary point that we want to highlight here is that 5 of the 7 listed company have reported current ratio below 1, indicating near near-term liquidity pressure. Okay, that's all about, right? So that's what they are saying. So let's go into detail. We can get into matrix first. We can go to screener, but let's understand what it is all. Okay, let's start from the first. So you can see that what's current ratio. So what's more relevant here? I mean, if you have seen a balance sheet, let's first get into a balance sheet and then probably come to the presentation. That makes more sense. So if you open any balance sheet, in the company, that's how it's arranged. The first section will be asset, and that's liability, and then we'll compute the ratio. So what asset? High level. If somebody is not that familiar with accounting, we'll just get. So assets in a way, cash in. So what are all those categories or ways by which cash can come into the company, right? Every company needs a cash, right? Of course, as an individual also, right, we get in cash from a salary or our investment or somehow, then cash out your expenses, high level, cash in and cash out. So assets are cases where cash in, account receivable, if you don't know. So once you have uh, sold something, whatever product you have, right? So they have a days payable, so they might pay you up to 30 days, 40 days. So this amount indicates all those amount that's being receivable. You can, this in million, you can assume in a crore or whatever makes sense on a high level. Let's say crore or I think generic. And then marketable securities. The name say they have certain security that can be easily sold into market. And there's a cash. They have cash. So let's say this company that has a cash, market account receivable, prepaid expense, expense already done, and this is inventory. So whatever product they have, this much amount of inventory, they're still lying, right? It is not been sent to the market or whomever they are selling, in a partnership, right? So they're still in the inventory somewhere. This you understand property and equipment, and as a goodwill. Particularly, there's a physical asset. It's difficult to sell your property and get the money out of. That's the reason it is not under current asset. What is current asset? Now that's liability again payable. So they have purchased something to make their products, whatever it may be, in the industry, right? And that's where so on a high level, let's get into again the PPT. So the asset section is the liability section, and then the ratio we'll get into later. So now just get into that. So what is this current ratio talking about, right? Account payable, liability. So within 12 months, next 12 months, right? All those assets that can convert it into cash, right? And that's where So it's in a way it's a AC test for certain company. Liability, all those amount that you have to pay next 12 months. So let's get into the basic first. So look at this line. Current assets are the assets that can be converted into cash within a year, right? So all those assets, if it's beyond a year, of course, then that won't be considered, current asset. Now, how do you current? It's a very simple ratio. Current asset by current liability. Whatever current asset you have in a balance sheet, this divided by current liability. So now we look at that. this number, let's say 2020, this is total current asset, right? That's in a cell number D11, right? Yeah, correct. And then we have current liabilities. That's a D22. And if you just look at that, what it is, D11 by D22. That's it. So he said 28. It's a healthy number, right? And that's where they're claiming this ratio for Adani group of companies is less than 1, right? So in a way you are saying, just to understand if it's less than 1, that you have to pay 100 rupees as a liability next 1 year, but you have less than that. For example, 0.067, then you have only 67 rupees that can be converted into cash if the current ratio is 0.67, but you have to pay 100. See that way. Now, so what we'll do, just we quickly get into uh, Adani group of, I'll just pick an example and then we'll get into that. So let's this company Adani Green, right? Look at this ratio 0.67. Okay, yeah, yeah, the Adani Green. So that's where they are saying out of 7 Adani company, the less than 1. This is relatively okay because you cannot have a hard cutoff. I understand few things can be solely in them, but that's how the metrics way and the way accounting is done. We'll look at few more company. Let's say maybe a company like Pidilite, so that comparison will see whether how much Pidilite has. So Pidilite, right, 1.67, right? Deepak Nitrite, well-known company, 3.24, right? Yeah. Even the Tata Chemicals 1.55. So you can, if you have a screener, you can go to that and you can just edit those columns. You can build current ratio. So that's a one way to look at that. Yeah, judge it whether the company is that healthy from the accounting perspective. We're talking about this company, you know, buy these, buy the, but this is one of the metrics you can do that by yourself. You don't need to that. Just getting into that. What I'll do now, I'll get into quick ratio and then we come again on the screener and then we build it. Okay. Yeah. So now, as the names, now we'll get into quickly into the quick ratio. As the name suggests, this is the point we introduced. So it's nearly same thing. Okay. But now we're looking at all those assets that can be converted into cash in next 90 days, right? A quarter, right? That's what it is. This is a more disk, right? In that way, yeah. More robustness of the accounting, how much capable they are. What happened? The company all of a sudden gets to us, bankruptcy in some cases. It can happen, right? So this is the one I have picked up that I rely on. Okay. Again, this is very simple. I'll get into that. So, Gabor, the only thing you want to understand here is liability is still the same, right? But the asset that now can be converted to only 90 days, respective of the previous one, where is the current ratio. That's the 1 year. Now we're getting again here. Look at this. What it does. Again, D22 is your, the current liabilities. Current liabilities are what? Liability that you have to pay within a year. Yeah. And now the only difference here D6 to D8. Yeah, look at that. Yeah, this is it. So we are ignoring the prepaid expenses that already done, and second, inventory. Inventory is still not sold, so we are not expecting that inventory to be sold within a 90 days. Yeah, that's how the accounting for quick ratio is done. So this is more robust in compared to. I mean, that's what I rely. In some cases, I understand it could not agree, but with the combination of quick ratio and current ratio, it makes sense. Okay. So what I'll do, we'll get into a screener and choose something on top of it. So I have already, have a few screens built up, and so I'll just take this fundamentals one, and just for now, I don't want to, um, but there are a lot of videos, the book value, but now I just want to utilize these ones. Okay, what I'll do, I'll just run a new screen. Okay, and then we see create a new screen, right? Let's say nothing. This let's see. Okay, so I think the better way would be let me pick up something quickly. Yeah, one moment. Yes, yeah, that way it makes sense to run through. second. Yep. Yep. So what I'll do now, we'll see what's happened. First, we put market capitalization, okay, and then we put these two ratios. That's my plan. So you know how much impact it makes in real time, okay. So market capitalization, get on how you can pick 500, whatever is convenient to you. Just examples, we are getting 1062 companies across in screen. Yeah, let me just add one more and see what happens. Yeah, I'll first use the current ratio. I'm just ignoring for now, and let's see how much it makes sense. So it was how many? 1062, and this run through now and see 916. That's still a good list. It is. Let me just add few more. Yeah, yeah. So now we are putting risk quick ratio 2, and let's see what are all company that's coming. Uh, you can combine with any other indicator, something like I'll just show you. Then you can click. So this is my list. I mean, you can just search by this name. And that fact, that's our channel name on YouTube. And then you can just see there are a lot of lists that we created around 3 to 4, and they can go through. So you can look at that what you have. But for time being, the one we want to highlight here, what happens, right? How many number we have? 906. Let's see quick ratio. How much you do this by? Wonderful. So nearly 300 companies is out of our list, right? And I believe this is a pretty good number. I'm not getting return on capital and any other thing as of now. We can have a book value and another metric since it's not a plan, but I just want to show you how much impact that comes here. One moment. Book value is greater than zero. Yeah. I hope you don't know the meaning of book value, but that's fine. Let's see how much impact in 617. That's great. So it's good then. I mean, book value largely for this at least should be good, right? If the current ratio and quick ratio is greater than one, I say a good company and book value should be greater than zero. So that's fine. That makes sense. 616 company. I can just save it here. If you want to just use it in later on. Yeah. Let's say quick quick ratio and current ratio. So you can search later and you can modify it for timing. I'm just making it public. So you can do whatever. You can search by username and you can get the list and you can look at our other filters and customize it. I hope this helps. And thank you for being here. And if you like our content, uh, please like and subscribe. Thank you very much. Have a good day.